Good morning, everyone. This is Anne Marie. Today is Wednesday, January the 16th, and here we are looking at the 4-hour SPY. Yesterday, we had this level, this box that we were looking at. I talked about the test of the box, holding the midline of the box, saying that the monthly VWAP could very well end up being support. All of that came out to be so, and here we are again, pressing up against the next line to the upside for us. And so this is where we're at. You know, a lot of people are still thinking that we should have a pullback. I actually do believe it should be natural for a pullback. I don't like gaps and running up with gaps. They make things a little bit unstable, and we have gaps here and a double gap here. There's a lot of gapping action that has not been filled. That eventually does fill. It looks like it may take a while for this to happen. We are in trending territory just about everywhere that I look. We've got trending territory, and it continues to look to the upside. Financials are going to start reporting over the next couple of days, and you know, a lot of people think they're going to be bad. I think they're going to be good, frankly, but we'll see. I don't ever trade what I think. I trade what I see. So what we're looking for is the breakout over 147.20 for upside momentum. Again, that top side target is 148.11. If you are long, ultimately, if you looked at the monthly VWAP and held it at support regions, you would still be in the trade. All right, and support should stay here. Actually, support should be about 145.65. If we lose the midline of this box, we should come down into the base. I personally believe that the aggressive short begins at the loss of 146.11 in SPY. So that's what we'll be looking at today. Well, we won't be looking at SPY. We'll be looking at the ES because that's what we trade in here, not so much SPY, but SPY is good for the general public as we give a recap of what ought to be done. Now, as far as drift goes, we do have a little bit of a drift, but if you notice, during the course of the day, we get bought. So these pullbacks, minor as they are still getting bought up, and that's excited buyers trying to step into the game. The January effect should still be in effect, right? And that gives us upside momentum on the month for the most part. Of course, we're not going to use the January effect to go long and then go play golf for a month, but we are going to think about things in that perspective. If your head has a negative bias, you need to just pay attention to what the broad markets have been doing since the beginning of the year. Higher highs, higher lows. We are dampening. That means momentum is slowing down. You can see it by the flattening action in these technical indicators, but we are moving up nonetheless. We are taking a breath. And when trend breaks by time and not price, as it seems to be doing right now, it normally resolves in the direction of the prevailing trend, and that one we can look at from November being upside. All right, that's it. Good luck trading today.